Greetings, market rebels. Welcome to this week's macro measure combined with, combined with sector situation. It is Friday, October 18th, 2024, and it is about 3:45 p.m. here on the East Coast, I think. So let's get going. I had a couple of phone calls right when I got started. So I got to get this done before I get peppered with another one and get this out for everybody this weekend. Here's a trusty disclaimer that you just read through. Here's our trusty intellectual property rights notice. And then here is a selective review of the prior week. What I'll say first, though, where's my hopefully soon to be trusty laser pointer? At the very top, our aims are to really just cover the nuts and bolts, nothing super complicated when it comes to the technical analysis tools and techniques we use. Basic things so that pretty much everybody can follow along, even if they're on the newer side. At least that's our hope. And then what we're really trying to do is identify the market environment that we're operating within and try to arrive at a news neutral. I don't know what happened to the S there, another typo by me. News neutral, most likely scenario for the week going forward, maybe even beyond that at times. And of course, we're going to highlight bearish and bullish risks at times when we think it's appropriate. Go to 2x if you can, see if you can make the best use of your time that way on the speed on the video, because I tend to try to include a lot of details that pop into my head just to help out folks that are newer, that things that I learned over the years in charting the markets and trading in the markets. And the bottom line from last week was that the trend was still up. We thought the consolidations that we saw favored, looked like they were potentially ending, and it favored a breakout attempt. And the bulls were just still in control, but the common sense factor and spidey sense factors had us concerned. So I highlighted an attempt last week, I think verbally, but doing it this week right through this emphasis in the text. And that's because I really thought they would try, but I didn't have a lot of confidence in it, right? You just never know, but probably some of you could detect, or maybe even, I don't recall, I said something that was like, yeah, we'll see what happens. So yeah, it was kind of like, didn't really get that great breakout. We got a nice little, I think, move on Monday, but then after that, it just became a tough affair. So anyway, they did try to move higher, but it lacked oomph, and that's exactly what we were thinking last week in terms of our notes on that, verbal notes on that. These two have been here for a little while, so I would say bottom line on these two is that they did try. Some stocks really ran nicely, but the major indices hesitated near resistance, question mark, support, question mark line, meaning I don't know quite yet if we really are beyond the resistance line, and we can say that we have a support line to work with now that we're above it, which we'll see on the charts. So we'll get into that, and then a little bit of a breakup visually on this, where pretty much I'd say everything below the top line is repeat from last week. Not very many changes. I don't even know if I'm really going to go in there. You could always just pause the video, and if you've heard it before, you'll kind of recognize a lot of the comments are similar. I did try to clean a few things up on that, but otherwise, the real key is up here for this week, and even here, right? It's a lot of the same. So I don't want to belabor this too much for that reason. But in this middle part, these are two kind of just reminders, sort of thinking out loud key parts, which is that this all looks set up to go. I've said, I've continued to say that because the market, in my opinion, the objective view of the market has been that things really look like they're going to run strongly into year's end. That's typically what happens after you get through a presidential election. It's completed, things start to go. But that's, of course, the big question. I feel like in the last quarter century, which I mentioned on Cocktail Hour earlier today, last quarter century, to me, you just haven't had that same kind of definite outcome on election evening that most of us were accustomed to seeing as we grew up. So I think the modern times are just not very clear compared to prior times. And so I don't know if you're really going to have this definitive thing that the market seems to be pricing in. And regardless of that, though, I do think if you get that, I do think at that point they could do a pop, depending on whoever the market really is cheering on. Which it seems like it's Trump, from what people have said. Interview big wigs on TV and other pricing in this. But again, I think they could be getting ahead of themselves, and they also could be way too much having front ran. So I could certainly see, even if they get what they want, an initial pop that they sell into. I could also see instant selling. You just never know, where they just sell on news immediately, and then people get worried, like, hey, this isn't it. People get chased out. And then within a week or two of that, they reverse the market higher to the end of the year. That's really the smooth sailing. Everything's wonderful. I just don't see that happening, but I have to acknowledge that it's possible, right? So that's kind of covers this middle part. As for up here, like I said, I still think the action is off. I just do. I can't put my finger on it because I don't think it's easy to see that in the charts. The bottom line remains, though, that much like exactly like last week, because they really haven't proven anything, that the consolidation ending does favor a breakout. But now you're getting, right, when we come back and start trading, we'll be very close to the election. You can't be surprised if the market kind of goes into a not that I'm forecasting that, but I wouldn't be surprised if the market sort of goes into chill out mode, and you don't see a lot of risk being placed right in front of the election, because a lot of people have already done it. I would say probably most big players have already positioned themselves for this bullish outcome, and we'll see. We'll see if that's right. But October's nearly over. It hasn't been as volatile. I thought by now there would definitely be some things that would have transpired that would have caused greater volatility. So that's something where I've been my sense has been wrong on that, but I don't think it's over yet. Just I thought that definitely October would have some wrinkle, and really just the whole fall really. But we'll see. We'll see. I could have just been concerned too soon. I do think that we're still in that extreme greed remains greedy. I was with that. We're just in that. It might not be perfectly at that extreme greed level, but we're just kind of pinned up in that area, which is not a good thing. Usually, when you stay right near extreme greed on that reading for a while, it's not too long into it, but we've been maybe a week or two near there, and that's not normally a great thing. I still feel like where there's complacency, it just keeps rolling along. I really do. I just don't think that's easily seen in the charts. I think this week we saw hesitancy in the sectors and market breadth, but they remain solid overall with this snapshot in time. And the put call ratio, I think, still that recently and even now, we don't have to cover it, but I do feel like that's sort of another sign of complacency. The sectors and the rest are a very interesting mix at the moment. The VIX has backed off, surprisingly to me, because usually it does run into the election. So it still has a week plus to do that. Maybe it will. But really, the dollar and the TNX just remain elevated, and they're not backing off much from their recent high, which is very recent actually. So this is a very interesting mix of all types of stuff going on. XAU powerhousing up. Let's see what else is there. Yeah, so I feel like it feels too good. It's too easy to just be. It's just too easy to be a bull. There's too many people that agree that it looks great and feels great and should continue to be great. So I feel like, and I made this mention on a recent webinar we did, and made the mention on Cocktail Hour. I just feel like you're getting towards really where there's too many people on the one side of the boat. So I think another way of saying that is the market is predisposed to a violent rug pull. Not that I'm predicting that that's going to happen. I think the chances that it does are very high. I just don't know when. I'd be sort of shocked slash stunned if we go through the election and on election eve, or I should say actually election evening, one side or another congratulates the other on their victory, kind of like the Gerald Ford, Jimmy Carter, or something like that. I just don't think it's going to be that smooth, because we haven't had that type of smoothness. And there's all kinds of fights about election issues in different states. Many of those happen to be the so-called swing states. So the market doesn't like uncertainty, and a lot of people seem to be pricing in, according to the experts, according to the betting markets, a Trump victory. Many people said that this leg of the bull, which really started last October, was predicated on a Trump victory. How they knew then, I don't know, but that's been the argument some of these guys have made. Anyway, the VIX is still adding more. I mean, VIX is still elevated. I'm going to be adding more. I wanted to get it done today, but as fate would have it, not meant to be. Hope I get my chance on Monday. Anyway, I am hoping to lose. I don't know if I've made that clear, but I really don't want to have my VIX stuff go through the roof, because that's probably really bad stuff for my other holdings, and it's probably really bad stuff for a lot of people's portfolios and holdings, and it's really bad probably for the country as well. But I do have diagonals management in plans, and I'm going to uncap. In fact, I was very lucky to have uncapped the put. I'm sorry, the stuff I've got in the metals. I uncapped that, so that was a good break this week to come in kind of just naked long, and it's going to finish very strongly, the XAU. So again, I'd like to make some adjustments, but I've got to get this taken care of for y'all as quickly as I can. I've got so many things that are just bearing down on me in life that I just need as much time as I can to address those over the weekend. I still see the megas with an issue, Nvidia with an issue. Again, bull spin would be the market's getting it done without them. The bear spin is something's amiss if the megas are this reluctant. And the retrospect argument is going to be, were they telling us something? And that would be, of course, if things really do peel off. So I asked Mark Lepresti on Cocktail Hour what his thoughts were on it, because I really don't have a great, I don't have a great, just this is why the megas are hesitating. And he thinks it's just people going elsewhere after having enjoyed wonderful success with it. And I do think there's an element of that. And I think I've stated that myself, but I feel like there could be a little more to it. And I'm not sure what it is. I don't know if it's over ownership, whatever the case may be. It's kind of interesting. We'll look at that in SMH too, because that's obviously the home of not only NVIDIA, but it's also the home of really probably the epicenter for what everyone seems to think is coming. That's going to be this new, bright, wonderful future, thanks to semiconductor advances, et cetera, and AI, et cetera. And, again, I watched Metropolis a long time ago when I was doing some film studies in college. So this is the 80s, and I'm all about that in a way. It looks great, but the underworld or the underside of Metropolis doesn't look nearly as beautiful and compelling. But anyway, I'll believe it when I see it. And I hope it does materialize for people that way. There's a lot of pain and suffering around this world. So if AI can fix it, I'm all in favor, as long as it doesn't go turn into Skynet. But anyway, I'm going to leave the rest of this. A lot of it is really the same kind of reminders, and I don't really check comments that often. But if I do check them and see people wondering, I'll try to get some answers in there if I happen to have the time. So on that note, I'm going to stop the share. I don't want to belabor this. I'm not really going to do a tabs check. I think that if we can do a tabs check, if some things really interesting crop up next week, that's where I would look to do the tabs check, and then we'll go from there. So let me get my other screen shared, and this should be screen four, I say, and it is there. So this is interesting because I think this is your SMH. You just heard the bell, and interestingly, you probably could make the argument that there is some kind of a flat line near where I'm leaving my cursor right about now, right? So 254. You could say, well, it's not a perfect flat line. You could maybe tweak it, but right around 254. And that's really where we tried to get up to today and through on the opening. They couldn't do that. They kind of opened it And then there really weren't many upticks from after the open, and it was down. Now it's not a really bad day or anything. It's certainly not a Tuesday like we saw that day. But bottom line is that you had this consolidation we talked about, and I'll go out a little bit on that, that we said really should, right, resolve itself to the upside. A few weeks ago, we were talking about a possible higher base camp in here, and that would allow this to power through and break out above these highs, and it did. And we said that should be potentially open the door to this gap fill back here, and it did. But you can all see, right? I was hesitant to kind of really say a breakout coming. That's why I said breakout attempt, and we'll see what happens and be careful on different, different underlyings. And SMH was one of them, and we usually cover because it's so important. So it did, and then you can see, right, this is why breakout risk is real. Like, you really can't go to sleep. This is why I'm a big fan of what I call the quick trim, where let's just say you trade a 10 lot of calls that you buy 70 delta like I like to. You get the nice little breakout, and then what you do is you trim a few of them, maybe two, maybe three, maybe one, depending on how far it moves. You take some money off the table, and that way, if they do rug pull and you come back to where you got in on the breakout, right, instead of losing money thanks to theta, you're in fact making some money because you were smart enough to trim quickly. My theory on this is that if you quick trim it and you get out of it for a small win, you're like, okay, well, I can't complain too much. At least I made a little money, even though it wasn't the trade of my dreams as I hoped it would be. And then on the flip side, it is if you have 8 and you sell 10, I'm sorry, you have 10 and you sell 2, makes 8, and it keeps going. I want your problems. I want you to trade places with me and say, hey, jackass, I sold 2 of those and I only made money on big money on the other 8. I think a lot of people would switch places with you. So I look at it psychologically like it's a win-win, right? If I do this and stay disciplined with the quick trim, that's smart psychologically for me at least. And then if either way, if it keeps going, I'm still a winner, an even bigger winner. So how am I really complaining? But that's why I always do jump to let folks know that breakout risk is a real thing, and you got to be on guard when these guys do their thing. And they did really rug pull it on that ASML news, I believe, and that was it. Fortunately for us, we had ADI as the name of the week that could break either way. Of course, that's how we trade things in the Rebel Pit Pro and Rebel Pit Essential. And basically, this looked really good, much like SMH itself. And then you could see what happened, right? Same kind of rug pull all the way down. So it was one incredible dreary day. And that's probably the best way trades can work out that are bi-directional, where we issue the trade right near the bell on Mondays for that service. And then the morning we open, and then we decide after just some trading, does it look good? Does it look bad? Is it going to go one way or the other? It made the decision to the downside, broke through the trigger level to the downside, and just kept going. And you can't get any luckier than that in terms of a very short-term trade where there was no chance to really go long. You played the downside, and not only did it deliver, but it didn't really even make you wait long for major delivery. So I wish they could all be like that, because that's designed for folks that are newer. So that would really help people that are not used to riding, a trade for long and so on and so forth. Instant payoff is hard to beat, and really even for veterans, right? But so this is what happened here. You could see that there's also a flat, I think, somewhere down near this 246-ish level in SMH, which is where you kind of wicked out on the lows on Tuesday and Wednesday. You were obviously also near the 20 in light blue, the dashed white, which is my 100. You were near all that. So again, as I say, right, the confluence or ganglion of SMAs caught the stock and helped it get some support, maybe along with the flat line. I should say ETF in this case. But anyway, then you get the bounce. And this is the thing I harp on a lot as a trend line person, that you get the bounce back up, and it actually stops at the trend line that I had drawn, trying to decide, how bad of a break this was, and literally trades right to it practically, and then starts falling off again. So that's really not a great look. You could say, well, um, what's your problem, Wayne? Because look, at the bottom line on this whole thing is that don't you now have a higher base camp? And the argument would be factually correct. If this was a base camp here, then this is also potentially a base camp here. But I think here, you hadn't fallen below this bigger trend line support that I've got here. You had fallen below that trend line right there, which I think is more minor or lesser in its nature. So this is more of a probably a little bit more of a substantial trend line or support line. And boy, Thinkorswim is up to its tricks with me. My goodness. So this is a little concerning, to say the least, right now, because it's a little bit, I think, more impactful of a support line that it fell beneath. And it does have this potential lower high in here. So if you notice after here, we really kind of came right into this base camp. We didn't try this sort of immediate pop, which really you can't rule out. But that's why we were putting out so many updates on ADI on Tuesday when it found support, just as SMH did, because for it to just shred right through is not, after that kind of a drop, is not really that easy to do. There's often a little bit of a counter reaction, which there was, and then they tried to rally, they sold into it from the open, tried to rally it, sold into it from the open. So this is part of the reason I'm not really in love with the action. I don't want to read too much into too little and extrapolate too much, but some of this action lately just isn't that great. And SMH not really being able to, right, with the major indices making new all-time highs in some cases, what's the story? Why can't this do it? Why couldn't it even close the gap? And I said this about the megas, which I may as well cover now. So let's get Apple pumped in there, Amazon pumped in there, Google pumped in there. Let's do Meta. Let's do Microshaft. Let's do NVIDIA. Let's do Netflix. Let's do Tesla. And so could this look worse? Absolutely. I mean, it looks pretty good, but we keep saying that this thing really looks like it's, at times we've said, right, it looks primed to go. And this looks like one of those times where it's again approaching these highs, but it's not the first time that it's sort of hesitated to. We can't say it hesitated yet. It's just trying. It's a fresh start, fresh try. But this should really be going right now. Now that it's this close to the election, I'm wondering, why it took this long. Can we really expect them to push all these names through in the last week leading up to this election? Yeah, I mean, you can't rule anything out. It is a consolidation. It really should, given the incoming trend, given the actual nuts and bolts or guts of this consolidation. I think you have to read this as bullish at the moment. If it keeps winding its way up into a more narrow situation, I would be a little more bearish and kind of look at it as a rising wedge, which can be really more dangerous. Some people might look at it that way already. I'm not ready to really go fully on board and say, no, this is bearish. But I mean, look, it's making a new high. So again, that's part of the reason why I'd be reluctant. This is might even be the highest high. So I don't know why these are hesitating, but you can see that at least they did perk up here at the end of the week. So if they start to break out, then not that the presidential election risk and all that stuff will go away, but I would feel a lot better about the market if these guys were back on board and really performing. And you could see that it was kind of a dubious type of a move here. And a lot of that probably had to do, right, with the EPS reaction in Netflix more so than it does, right, how the rest of these stocks performed. So this really elevated the whole thing, probably, right, a squeeze. So if I do it all really aside from the Netflix madness, the typical modern EPS reaction madness that you get at times, Microshaft, let's see, we'll do NVIDIA, we'll do Tesla, I think, and leave out Netflix. And yeah, this isn't doesn't look nearly as ready to go. Could change very quickly, but it's not near the high that without that, and doesn't look primed to go. It's consolidating still. It's stuck in a consolidation. So yeah, I don't feel that great about the rest of these as a package. I think the Netflix is overdone and it's probably going to give a little bit back, but I don't really want to get into that. That just kind of trader gut feel. I don't know. For all I know, there's going to be more upgrades coming on Monday morning. But anyway, the point is these aren't acting that great. So SMH, not so great, right? What's the story there? We had I'm complaining, but not looking as stellar as it could. Nvidia, we've got to cover it. This makes a new high, okay, and I think I told everyone last week we had a bullish idea in here. Like, how much are you going to complain, right, that this worked for you? But it's just right. It's barely making a new high. Some people are going to say they don't like the action over here compared to this action, which it barely exceeded that, by the way. It was just 13 cents higher on this high. And it didn't just power through the first time. And some people are going to say, well, there's negative divergence going on over there, right? I mean, on this right hand side. So yeah, it's got the higher high and all that. And yeah, it did have that kind of bullish consolidation with an incoming bullish uptrend. It should break out as a bull, and it did try to do that. And we were fortunate that way, but it didn't really deliver in with the same gusto we've been accustomed to seeing there. So I'm just very, very, I guess, skeptical about this market right now. Even though we've been sort of siding with the trend and the overall bullish snapshot that the market keeps presenting to us at the end of most weeks, it's just, I don't know, there's something about it. I don't know if there's people just that are being really stealthy and they're just really pulling back because they're unsure. Maybe there's a lot more people that are a little more concerned than meets the eye. I don't know, but overall, it seems like there's a lack of concern to me, just in general. So, which we covered on our tabs check last week, and there's more to that. There's a lot more you can go into, but we only have limited time. So let's now move on to a related major index ETF, which would be for us the QQQ. And in terms of the Qs, again, right, we're used to these being really neck and neck with SPY, or even at times leading SPY. And all the good things I could say about the technicals in SMH and incoming uptrend and bullish consolidation and should break and all that stuff applies here too. And it did. But a lot of people are going to also say, I don't like this as much as I did when it was acting this way. And at the moment, I would tend to agree with those people. It just doesn't have that same feel. And it really is coming up to where you're about, I think, roughly speaking, 1 month from when they usually do the, okay, guys, it's bonus time. And they just pick this market up after the election has been digested for maybe a week or 10 days. And then just the fun begins, right? And you can start really enjoying the bullish ride into the end of the year. And I would not rule that out at all. I mean, I've been saying for a while in the write-ups in our newsletters that I write, I said, I still continue to see big picture upside in this market. And so I do. The charts just keep saying that there is some, I think, but I think this election situation is not as, the whole situation is just not as placid in my mind compared to the way the market seems to be presenting that it is. So just be on the lookout. You got to trade. A lot of what we do is short-term stuff, but I would be for longer-term stuff. I would be hedged up and in many, and then that's what I'm doing myself. I mean, so with different things. So anyway, you're still off the highs. You're about 2%, roughly speaking, away from the highs. You're not acting as well. It's not over yet, though, right? So we could easily say, just use that 20-day there in light blue, and as long as you stay above the 20-day, and which happens to be above the 488 level, where we've got this sort of line 487, 488, which we said was important. It keeps kind of coming back to there and delivering the goods. So you still have higher high, higher low. It's all good. you could say, well, wait, isn't there a slightly lower high potentially? And could this be a breakdown? It could, right? But this is really, at this point, I think you're jumping to conclusions. You have to wait for a break to in the action to start saying this was a lower high. You just don't know yet. You could easily eclipse that and be right back at it. Literally on the opening on Monday, it's nothing special. You could be right there. You're talking about less than 1% pop to the upside. So that's that. So you really, I'm kind of more of a, if you force me to come up with the most likely scenario, I'm really more into the same thing as last week. The market probably tries to move up, but does it have staying power? That's basically what we said. What about if there's no follow through? That's a problem. And so right now we have this tough call because there was no follow through. So it's another kind of lazy breakout attempt that came back and found support where you'd expect it to and hasn't broken it. So a lot of people seem to want table pounding. I'm not really a table pounder by nature. Occasionally, I get close to table pounding when I see incredible setups with a combination of factors, but they're not always easy to come by. Right now, I think you're better off just being prudent, saying, this is a tough one right now, right? Would I trade this thing breaking out above Thursday's high? Yes, because I'm watching the market all day if I'm not doing all the work that I do for Market Rebellion. But would I be at ease like just another Monday or another Tuesday in a bull market that's going to last for 5 years? No, I certainly would not be that way because um, it could still happen, but I feel like again, I don't want to belabor, but I just feel like the selection risk and all the world risk, domestic risk, it's really a lot more serious in my book than is being priced into the market currently. Let's put it that way. And once again, I will reiterate that I am not doom and gloom. I just hope to be wrong. I do actually hope to be wrong about it. But you could say, well, look, I would say this 497 line that I'm on, that's been a tough spot, 497, 498. So that's your first thing you've got to look to get through. You really got to look to get through probably this trading high here at 498.83 if you really want to push it a little further. That puts you within easy striking distance of the all-time high. But you're just not getting that good kind of oomph to all this just yet. So I just think the jury's out, and to try to make a really strong case where the RSI is back to heading up after Thursday's whooping. So that's pointed up right now. You've got a higher low established at least for now because that's a very clear higher low versus here. Now it just becomes right. They tried to bounce it from here. It didn't really work to a great extent so far. So there's still room and there's still potential, I guess, for more, but I don't see anything where I'm really going to pick a major fight with it, nor am I going to come in just as a proud bull. I'm not going to come in Monday morning as like an unabashedly proud bull. So if you want to know where the real breakdown is, honestly, you've got to wait for the 487. Your 20 days right near there. It's a 488.31. So it's not that you can't short in front of that, or I should say for us, buy puts. It's just that you got to expect that unless there's a real driver, some market development, some news development, whatever the case may be, you're normally not going to just shred your way through the 10, 15, 20 and an important flat line near 487. You're just not going to do that without a real reason normally. So if there's a reason out there that's legitimate or not, it doesn't really matter. It just has to be like this is the reason that they're hanging on it at the moment. But there has to be normally something that could explain it. And sometimes there is selling and you don't know what's up and you're down big and the story finally comes out. That's relatively rare compared to they're selling and people have a general idea why. And it's look because of this. Just like why were they buying Netflix today, right? We know why. Why did they smash ASML and semis by extension on Tuesday? You kind of know. So this is you just got to wait, right? And you can see right, the amplitude of these little waves is really starting to diminish greatly, right? The frequency of when you go from high to low seems to be picking up. This is very indicative of right? That kind of rising wedge, what does usually turn into a rising wedge, that isn't very good. But I would, again, it's a little early to call it that. To me, it's really more of, we had more of an ascending triangle that we tried to break out from. But yeah, it's starting to resemble the rising wedge. So another reason to be right. So if you add it all up, market environment, where are we? You're really in front of a potentially big risk event if this election goes off the rails like others have in modern history. And there's maybe arguments over what's legitimate, who won where, by how much, and that kind of a thing. So that's what I think you have to prepare for. And I don't think a lot of people seem to be very prepared for it. That's the market environment of the short term. The longer term or intermediate term is a really great looking market with global easing synchronizing. So that would seem to be really good. But the flip side to that is there's probably a lot more geopolitical than we normally have in terms of risk. And this country wants to bomb that country, and this country wants to do that. That whole mess, right? That just sometimes it's worse than at other times, but it's just an ongoing mess, and people warring with other people. It just gets so old. But I feel like you've got the breakout from the rising or ascending triangle, and you also have the rising wedge that's possibly developing. So a couple of one positive, one negative. So yeah, I mean the hesitancy, not normally a great thing when something that's such a key part of the market is doing well. So there's some thoughts on that I would share. I'll give you just the levels we talked about. I'll try to get the levels on each of them. I would be a breakout buyer here in SPY. I still think there's big picture potential. That would be above the 586.12 all-time high that we made on Thursday, right? Another where you make the high and don't really do anything with it and come right back in. So the issue here is we've had this line, which I'll make blue, and I just did, and I'll unclick it so it's white again. You can see how we traded around above and below that line, and that's the thing. Like this, just like I mentioned earlier, the SMH respected our line. This seems to be respecting our line. You can see the rising wedge sort of a little bit better, I think, here on the SPY. So this is dangerous, right? Like just by its nature, it's dangerous. You could say, well, how dangerous can it be when the market's making a new all-time high? It can still be dangerous, in my opinion, and so this is another reason why it's hard for me to rest easy in terms of these aren't everywhere, but they're sort of on their way to forming. So again, it's just another reason to be sort of like, instead of more of a trader spidey sense, it's more of a technical caution, right? Than it is that. But it is a little part of that sort of sensing that something's just not that great or right. If you look back over here, you had stronger RSI performance as you were ramming speed all the way up to here to hit this high. That was really stronger. You can see that this has not been nearly as strong. Some people have problems with that. And a lot of people are going to call that negative divergence. And I agree. Like if you compare this higher high to this lower high, and you've got this lower RSI reading over here, it's not as good as you'd like. But right, you can't really fight against it quite yet unless you're super aggressive, because you're just really right a point and a half away in a $585 ETF. You're a point and a half away from the all-time high. Right. So how badly, right? How, like if you had gotten too aggressive before with this, thinking that this is developing, they'd already have you in trouble. Maybe not big trouble, but you'd already be in trouble. So it's really kind of a rough situation. I would say on this one, clearly the breakout area is there. I mean, you could buy it in anticipation of that breakout area. Here, it's going to be tough to draw because of my messy charts, but I don't know why I did that. Boy, oh boy, sometimes this think or swim can really steam my bean, as they used to say. So I'm going to pull this up here. Anyway, you get the idea on that one. It's pretty hard to start shorting that, but if you want to, you probably could say a little bit below Friday's low is where you could start picking a fight on this thing. You are picking a fight against something that's been in an uptrend. You can see that the SMAs are stacked and sloped. All of them are positively sloped, with the shorty on top of the next longest, on top of the next longest, and so on. Pretty much the idealized SMA profile that so many people love. So you've got that. So yeah, if you did that and there's no driver for this market rolling over suddenly, most times you're going to get smoked on that trade unless you're day trading it. If you're intraday trading it for minutes, seconds, maybe up to an hour, or two, something like that. But you're going to have trend line support come in right where the purple line is that I'm mousing over. You're going to have the 10-day is right there. That's 55298. So call it 5 5. I'm sorry, the 10 days. I'm looking at the wrong one. That's 578.72. So you could get a little bit out of it, but I mean, it's probably going to find support near there. And in most cases, if it doesn't, again, there's probably, if you have a real reason for the market being under greater pressure, it's a different story. But you're going to short, and then you got the support line, SMAs, you get the idea. They're all waiting to catch it. They're all waiting to catch it and support it because that's what people do when that are trend followers when there's a strong uptrend, and there has been one. So you've got to have a reason why, not to get into the trade, but why you think the market's falling, in terms of to really shred through this, right? You probably would need a dynamic shift. You would need some change in the dynamic of why is the market not acting well. Now, it won't be necessarily always be something that gets put on TV, but it could be something like, well, in the week before the election, people have decided to take their profits. And there's some real sellers out there. And maybe you'll see that. It could happen. So, but it normally, right, you don't see there's no really good reason. Things are just getting smoked right through and dropping all the way, let's say, to the 50 there in gold without a reason. Usually you'll find out there's a news story or a reason for that. And I would wait and see what that would be in the end. But I mean, you can't wait for it to trade it. No, in other words, like trade it and then hopefully it comes along, but one way or the other. But yeah, you'll probably find out. I've very rarely have I seen, let's say 3 or 4% swoons where there wasn't at least some trigger for it, where someone said something or this development happened in the markets or rates shot up. And the reason for that is this. Here's another, right? IWM. And I believe when we covered this last week, we said it too had a base camp. It was a lot closer finally to this key area 225. Maybe had a chance to break out. Looked like it was on its way back up to try. Would it be able to get back up and trade towards this high near just under 229, 228.63? It couldn't get there yet. It did get through the 225. It did trade up to what, 227. But again, late week hesitation on this one. It did, though, hold the past two sessions above that former 22488 or 225, whatever you want to call it. So that's a good sign. If it continues to be able to hold above there, not that it can't dip below, but if they can hold it above on a closing basis, that might give it a good shot to keep doing it. If they can't, right, you're probably all the way back down towards the 10 and 20. So would I trade this? Yeah. I mean, given how close this high is this day to our current day's high, I would just wait for this to range expand beyond 227.17 if the markets look good, if they're acting well. So you wait for that. If you want to fight against it, go with your 22488 or, whatever. I would say what the low is on Thursday, 22491, 22439, but it's pretty close. Regardless, you're going to want to wait for this to potentially break down. It would be a failed breakout, false breakout attempt, and then you probably trade down a little bit. But again, you can tell, right? It's just been consolidating for a while. Lags behind big time, has big time upside potential if it really does ignite. I think that's harder with with rates having screen back up. So, this is to me like a little dubious, even though I do see the big time potential in it. I think Tom Lee had made that comment about it, a while back, several months ago, is my recollection, maybe 2 months, 3 months ago, can't remember. But anyway, I agree. I mean, inflation alone, this thing really starts to have a good economic underpinning to it and interest rate background. This could really tack on. I think, 20, 25% is not a problem if it really does break out and finally go. We need to trade above 245 to do that, though. Not going to go into all those details, but yeah, the breakout and breakdown levels we discussed. That leaves the diamonds. That leaves those. and new all-time high today, right? I feel like it's getting it done, but it's sort of um, losing a little bit of its swagger. It's really been, I feel like, a little reluctant with some of these things. It's getting up there. You can't really say it's overbought in the sense that it's dramatically overbought, but it's very close to being officially overbought on RSI basis. It's a little bit stretched from its 200 day here in purple. I don't think that's the biggest deal I've seen. I'm not even going to bring up those screens, but I've seen much, bigger stretches than that in major index ETFs. Then you do kind of still have that kind of narrowing, that kind of rising wedge to into new all-time highs. So nothing really horrendous about it. I do think it too is another one that looks susceptible. The other ones do too. I just feel like the way it's trading, and maybe this is starting to be explained by the proximity to the election. Just there's that lack of really powerful let's get me in because people want to get past there to really commit more. I don't know. I'm just throwing that out there. I don't watch CNBC and Bloomberg. I do leave them on sometimes to be able to hear for breaking news. But I try not to listen to them if I can because I just endured too much of it. I've endured too much of it over the years, and I can't stand what they've become. And it's just horrible for me. It's horrible to listen to. Like they went from, in my mind, it was a lot more serious and more about business and less about why everything has to be have a political angle to it. In these days, in news coverage is beyond me. Not every single thing has to have that. Sometimes it's pertinent. We mention things too. You have to at times, but other times, right, you don't need to, and they just seem like they spend way too much time on that. So I just really have a hard time listening to it anymore. But having said that, I'm not sure what they're putting out there. But yeah, I think you definitely could see sort of like rising wedge type behavior here. Again, a little concerning to me at the very least because that pattern is one that's worrisome. It's not everywhere though, so I'm not worried about it in everything we've looked at, but it is starting to sort of emerge in a couple of these major situations. So if you said though, how is this market overall? I don't think anything's really atrocious, but just to kind of throw in terms of being overbought, I should say anything's atrocious on the overbought side, but you're getting there, right? I think if you look at things like the monthly on the diamonds and the weekly, and very soon, if there's another burst, the daily, if they do a quick burst on this, pretty much everything's going to be registering overbought. It's not drastically, right, or extremely overbought, but it's all overbought. And so when you mix the complacency in with the overboughtness, you end up in a situation where it's probably just a matter of time. It just, how long can it stay that way? The same thing can be said of the spiders, by the way. They could easily become overbought in virtually every way. And again, it won't be extreme. It'll just be, it is what it is. So just keep that in mind. We did look at the megas. I wanted to show, I'll just show you how much the TNX just has roared back. I keep doing it. I keep forgetting to add the CGI on there. .cgi. But yeah, the 10-year has really, come back strongly from that thumping that it took, and it's on its way back to challenging the recent high after it had a nice little dip there earlier in the week. So there's that. That's kind of an interesting development. Remember, usually the dollar and yields move in the opposite direction of the market. They've moved up a lot. Maybe the market's looking past it because they're just thinking it's a reflexive thing that's happened after the kind of whooping that they both took. But the dollar moved up. This is not normally good. Usually when this is happening, stocks are not doing so well, but also when the dollar is doing that, the XAU doesn't typically do very well. And look at that, right? So I think of like gold and silver, and the and TNX and DXY and the put call and the VIX still hovering, near 18 as of today. these are all sort of telling you that there's something out there, that or the people are hedging, and kind of like have, I think that means they kind of have the perspective that I do, that there's some concern from enough people that certain things are acting in a certain way that's just atypical and makes for a very, very interesting mix. So I don't know, I don't know what side of this is going to end up being the victor. Both could lose, both could be right. It depends on timing sometimes, but depends on what kind of volatility, if any, comes our way with respect to the election reaction. So there's that. But this is all very strange. I think I didn't even look at this because I was so busy, but I had the uncapped GDXJ, and yeah, I mean that's I'm really lucky. I'm lucky. I wish I would have been able to make an adjustment before the end of the day. I did not see that it really powerhoused as high as it did, which is good. Good. So at least there's that. That helps me out because I my VIX spreads took a little beating. But if some of those upsiders that I'm short get cheap, I'm just going to buy them back and go. Like I said, I plan to go naked long if I can, with the election situation as a hedge, hoping to lose. Kind of weird, but yeah, that's what I'm doing. Um, Everything else will be good as a result, I hope. Let's see. Now, I think it would be good for us to quickly cover, and we'll switch over to SPY. It does not really affect things, but I think Barry made a mention this week in one of the webinars that we were in, that he's a former market maker like we are, and he had said, yeah, the 50. I think he said the 50 new highs, in the and stocks above the 50, that's not really making the new high, and that's not non-confirming. So no argument. So that's, and I'm not going to call Barry a nitpicker. I'm not sure because I didn't have time to really get into the nature of his comment. But yeah, so I don't want to have everyone think that my quick check on breadth is really just like, oh, everything's good. I think, and I'm not saying everything's perfect or as good as it's ever been in this sort of cycle that we're in. I'm just trying to say that if you look at it on balance, right, you could find problems with maybe this or that, but on balance, things are pretty good overall. It's really hard to find big problems with this. So, not to say that this little divergence or non-confirmation isn't anything, but the 100 stocks above the 100 are at new highs, and the stocks above the 200 are really close to new highs. They're not there, but they're close. So I'm not. I feel like the jury's still out. Now, if all this stuff rolls over from here, it's not good that that only the 100 was able to do that. But there's a lot of other things in terms of the new highs and new lows, and we've talked about this. So it wouldn't be crazy to me too if things just kind of eased off on a breadth basis, just as I would say, like the market easing off. I could continue to be surprised that they just don't care about anything, which really isn't typical in front of a presidential election. We already saw that normally you do have the VIX move higher into one. So to me, it would be odd if it doesn't at all. In fact, if it goes back down, it would be really odd. But it could happen. I just think that things sort of sidewaysing wouldn't be a shocker, because if they really are bullish, as they appear to be, and nothing does develop, maybe people just decide they're so close to the election, they're going to wait till the other side of it before they commit bigger capital towards the end of the year. Just a thought, but I don't see anything, honestly. I agree there's little issues here and there. I hopefully didn't mean to imply that everything was perfect, but excuse me, I just think that overall things look really good from a breadth basis. You could see even up here, you're really making new highs on advanced decline cumulatives. So it is there that way, if you ask me. And then if you look at, say, sectors, which we'll do, we noted, right, that there's a few things that were sort of picking up again, that were leaders, and those were XLK and XLC. I think XLC made a new high, XLK is still off the high by a little bit. But there's been hesitancy here, right? I think there's a little bit of hesitancy in, say, XLY, right? Not taking out and making a new high. You did get a high in XLB. They're still right below the high in XLI. These have also been leaders. They did kind of roar back with XLU, which again had been dipping, but they kind of roared that back, I guess, on the I don't know, the AI story, the chip story. Transports, as we said, they were looking better. They tried to break out and make a new high and did, but there's hesitancy in XLY. There's hesitancy in XLK, and there's hesitancy in XLP, XLV, XLRE. It's looking a little better, but it's certainly not breaking out. So I don't think things look bad. I continue to say, like, overall, the snapshot looks pretty good. You're not breaking out across the board or even close to across the board the way we have seen, but overall, it still looks pretty good. Oil slash energy, it does its own thing at times. I think there were some definite things that developed there, so that backed off. But overall, really, I don't see massive problems here. At least XLY is trying again and isn't far from the high, and that would be good to see consumer discretionary do better, and certainly transports, like I said, doing better. These are still very either making highs or really close to them, which is good. All three of these really are. So they're all hanging in there and doing pretty well. So I don't really feel like I see anything atrocious in the sectors. And normally, right, we try to highlight something really interesting. The old sector situation approach was more about trying to see what was emerging that we could start maybe getting in on early, or what was looking concerning. We did have some good ideas recently in financials. We do like to trade the pre-earnings runs. And we did have a nice pre-earnings run that they then worked with here. So some names were in there. You can see they had a nice ascending triangle they were working on in there leading up into this week. So that was good. Financials doing well, normally a good sign. It's sort of one of those things that's a good sign for the market that kind of makes you sick when you know about some of the people at these Wall Street banksters, but it is what it is. But yeah, that did really well. You might say, well, that's overdone, and you'd be right. I think it is a little overbought right now. So again, that backing off, things backing off a little bit and kind of chilling out wouldn't shock me. And that's kind of in line a little bit with the wishy-washy. I'm not really sure what to expect from next week. Read, I would just kind of go with it. So I'm not really making this lean this week. There's enough concern on the one side. There's the strong trend on the other. Then there's the calendar being so close to the election, what the VIX normally does. So there's a lot there, but I don't really see anything atrocious this way on the sectors. Let me think if there's anything else I can show. We did talk about, I'm not going to go into some of the granular stuff we've done in the past. We did talk about every level, I think, in the major index ETFs. Yeah, and that's it. So yeah, one thing I could mention to everyone is crypto. This has just been a really great space to trade. We had a couple ideas this week and there at times. I normally try to share that. I don't know if I talked about coin last week. Usually when we get it rolling after there's been UOA, it really can trade. So if I have a good UOA hit and good setup in there, I almost immediately get on that and just go with it. One of the stocks that I said kind of earlier said stocks performed, but not everything did. One of those was Autodesk. We had a hit on this one. I'm not sure if it was UOA Pro alone or Essential. I can't even remember. But yeah, that one was another one. And I'm starting to get worried about. But this is why, like, you would say, well, if you guys traded it this week, wasn't it already overbought when you guys put the idea in, like by definition, because the RSI was already over 70, and it was. You could see right there that I don't know if we put the idea in on Monday. I think we may have. There's Monday. You're on a Bollinger Band, and you're also at 70 plus on your RSI, but that's about where the breakout level was in my recollection, and it traded up further. And this is why you can't, the reason I wanted to bring this one up is just to be okay, this is one of those stocks, but this is why you really don't want to pick fights too soon. And you want to go with strength if it's there. And now it's a lot more dangerous in my book because you're now up towards 76 on RSI, and you really have widened your Bollinger Bands out quite a bit from where they were. So now the Bollinger Band stretch is a bigger deal. I'm not saying that this is doomed. I'm just saying that I would be, if people would say, well, why not just avoid it? Well, if somebody that's been right about buying calls comes back in and either rolls aggressively, or sometimes they step up their size, sometimes they just come back and buy more, sometimes they roll and step up their size. It just depends on what it is. But as long as the market's still acting well, um, I would still trade this as a bull. I mean, I'd be willing to buy this on a breakout. But what I would add is, right, my patience for letting this hurt me is going to be very low, because I know I'm not, there's no, I don't know what inning I'm in. You can never really know for sure. But if this was the first inning on this day, this can't be the first inning up here, right? It just can't be. So I do think for this type of a move, you're in the latter innings, and that could continue to run, no doubt. I wouldn't be shocked to see this thing go up towards 300 if they do find a way to continue to squeeze, goose, melt, whatever you want to call it, up, whatever it is. But you just got to be really careful, right? So if I normally like to buy 70 Delta, I'm not buying 70 Delta. If I normally like to roll every time the stock moves, let's say 1%, I'm not going to wait for 1%. I'm not going to wait for a nearly $3 move to then roll. I'm going to probably roll every dollar to dollar and a half if it's possible, if the options allow me to do that, because I'm really going to keep this on a very short leash. I'm just going to trade, right? I'm going to trade what's in front of me and try to appreciate the full risk spectrum that I'm getting involved in. This is why I always go back to what kind of a what kind of a market environment are you operating within? And you could say, well, there's the macro environment we talked about earlier, but I'm talking about within the stock. So people want you to sort of do the same thing over and over and not veer off from that or vary from that. But I think it's all really, you're better off if you are willing to be flexible yet again, and you're willing to say, I'm normally like to do this, but I'm going to do that because the situation, this is what the situation calls for. So if you were a big bull in the market, you're a bull in tech, you're a bull in Autodesk, and you see this big dip, then you start seeing your technical shape up and looking good. I'm much more inclined, right, if I'm bull on everything, to be more aggressive when there's a balance in an uptrend, rather than, right, I've already ran up for, what is it, 1, 2, 3, 4, 5, 6, 7, 8, 9 sessions in a row. I'm running to the upside. See what I mean? Like you're catching this a little bit later. So I just thought I'd share that just to kind of come down onto a few things. As I said, I think I'll just finish on the VIX. You know, XAU powering, the VIX still finding a way to linger in these upper teens. Little concerning. I'd be stunned, but again, I've seen things happen. I'd be stunned if they really let this thing continue to drift lower this close to this election, especially because it normally moves up into the election. But you just never know, you know. And again, I'm going to be, since I couldn't get it done today, I'm hoping they do bring this thing down, because I'll be loading up on even more than I've got right now in terms of these spreads, which I then hope to get a pop and then uncap. That's and roll up and uncap, I should say, in VIX. But I'm spread out over Nov, DEC, Jan, and I think I'm going to do some Feb as well if I get time. So on that note, I think I'm going to wrap up. I'm going to wish everyone a wonderful weekend if you get this video early. If not, I hope you did have a great weekend by the time you got to it, and a safe weekend too. I want to thank everyone for tuning in, and I do hope that you got something out of this week's video that you can put to use to help you in the week ahead or at some other time in the future. And once again, thanks for tuning in. Everyone, take care.